his younger years where he wasn't paying attention to like his bills, his mailbox, none of that at all, zero. And so my younger brother had a 553, I believe, when he came to Nicole. And Nicole helped him out with all her wonderful skills and coaching and knowledge and expertise. He is at a 734 when I pulled it for his purchase that he just bought a home in Northern California with his fantastic credit, thanks to Nicole, and doing even better, as time goes on with all the tips and tricks and information that Nicole shared with him. And one of my favorite things about Nicole is she's bottom line, no BS at all, zero. Like, we send people over to Nicole. She's our number one preferred partner for credit related issues or questions or solutions. And if people aren't a good fit for credit repair, she's actually literally going to tell them, versus these 800 numbers where they're just like, yes, we can help you. We just need your MasterCard or Visa. So, that's the information that I have to just kind of tee her up. And I'm going to pass this over to Nicole and let her do her thing. And of course, we have Eddie here also, who's helped pull all this together, and he'll hop in at the end and chat with us all.
Thanks, you guys. I rarely get to see faces, so it's so fun to actually see you guys, especially like it looks like you're in the Bahamas there, Wes. That's pretty cool. Awesome. All right, I'm pretty sure I have the ability to share my screen, so I will jump in. Literally like a half an hour ago, I got everyone's contact details. So I went ahead and sent everybody the deck just in case. We're probably just going to touch on a handful of the slides, but just in case you guys want to go back and look at it. If you have any questions at all, and then I will be following up with some of the links that go with the presentation, since when I'm presenting, it loses the links. So happy for this to be interactive. A lot of you guys have come to me through your loan officers, maybe Amanda's team, Ed, Wes, you guys are working with them on a home purchase. They're your loan officer. So you've indirectly worked with me. So hopefully I get to work directly with you as well. It is always nice when we have a loan officer involved, because not only can they tell us what loan program they're trying to match the client to, but they can give us specifics like what credit score do they need for the middle score, what's the specific underwriting criteria. Maybe it's a first-time home buyer and they can't have any unpaid collections. Anything like that is so helpful. The sooner we can get a loan officer involved. But at the same time, we can take a client without a credit report, and then we can engage a loan officer if buying a home is part of your client's goal. So whatever way you guys want to work with us, we're here to support you. So I'm going to go ahead and share my screen. And when I'm doing this, it kind of goes into this full presentation mode. So if there's any questions in the chat, will Wes or Eddie, will you guys kind of help me out here? Okay, I appreciate you. All right, so can you guys see my screen at this point? Yep, okay, cool. All right, so let's see. So this deck is specific for Keller Williams and Movement Mortgage. So just to give you a little bit of history, when we started this company about 11 years ago, Movement Mortgage was one of our very first partners, with a few other local San Diego kind of companies like Military Home Loans. But we've grown nationally with Movement Mortgage and Keller Williams. And so we're so grateful. And one of the things that we do to give back as an appreciation is to do these types of annual presentations. So some of you guys may have sat in on presentations like this in the past, but we are ever evolving. And let me tell you, COVID has made things really interesting for credit repair. So I will touch on some things that have been a little bit challenging, and also things that have actually helped a little bit. So I'll go through that as we go along. But one thing Wes said that really I think is something I always want to address when I'm talking to partners is the elephant in the room. And if you guys have been in the business for a while, there's no doubt you've been burned by credit repair in the past. You've lost clients, you've got a bad rap. So the one commitment I have to you guys is that we're different, right? So my background as a credit expert is because I worked for Bank of America for 13 years. I actually started there when I was 16 years old. and then eventually made my way to FICO. I worked for FICO for 5 years, and I really understand and help build and deploy the analytics, right? The predictive analytics, which is all that fancy, word phrase means, is helping determine what a credit score or a fraud score outcome is going to look like based on the risk. So in being able to be part of the usage at Bank of America and the design at FICO, I became really, really knowledgeable on how do I look at a credit report and be able to determine what's impacting somebody's credit score and what are the options to actually raise a credit score. And those are some of the things I want to talk about today, but I just want to start by addressing the elephant in the room. I will apologize for my industry as a whole, because I know that it's got a lot of fraud and bad actors in it, but I will tell you that we're different. And if all I can ask, and I guess, the one thing I gain out of this is that you're willing to just send me one credit disqual, one family member, your own credit. I don't care if you're to 700, you're trying to get to a 740, just give me that one file. Let's work through it together so that you can see really how we analyze it and how we make our recommendations. So let's just jump in. So obviously the beauty of all of us working together, both the realtors, the loan officers, myself, and the clients, is it really is a win-win for everybody. In our technology right now, we only have the ability to put one referral partner in our system. That is a little bit challenging. We are deploying some new software in January, which I think will enhance that. But ultimately, when there is a partner involved, we do keep you updated along the process, and really try to let you know where they're at, when to engage with their client, if you're ever being shopped, and then also when to actually start the pre-approval process, because we've been able to achieve the specific goal that you've asked us to help your client with. One thing that we've really focused on the last couple of months, and you'll see this a lot into 2022, is this new thing called Credit by Nicole. And really what it is a new part of our company, which is focused on do-it-yourself services. I've never done this before, but it's something I've always believed in. And after doing this for 10 years, our clients have told us sometimes that they don't always want full services. They don't always want the done for you, more expensive options. Some clients want to learn and they actually want the tools to do it themselves. So what you'll see is we are actively deploying that. And I think of it like a ladder approach, right? So maybe your budget is something small, less than $50. Maybe you just want a one-time customized consultation, or you just want a downloadable guide that's, one of the guides we're deploying right now is called 5 Steps to 50 Points. So understand that over time, you'll see a little bit more products and services around do-it-yourself. And we're really trying to build online courses and help clients get the education support that they need when they need it. And then we're always going to have our full services we're referring to as done with you. And the main reason for that is because as much as I'd love to do everything for every client, what you'll understand about credit is, and I'm going to save the meat of this for a particular slide, but what you'll understand about credit is cleaning up a credit report only helps solve part of what's impacting somebody's credit scores. Right? So credit repair alone is not going to help your clients achieve their highest possible scores. So we may give advice through our coaching, but ultimately it's up to the client to go and pay down that credit card or open up a second credit card or take a particular action. So credit repair is never a full service because it always requires the client involvement to take actions once they become educated. So this will come as we continue to expand this. I'll share more of it with you. But we literally just deployed our first do-it-yourself guides this month, and I'm super excited about it and look forward to your feedback on that as well. So one thing that I've consistently heard, and I would imagine you guys are sensing this as well, or you get this as well, but the most common question I get is why, when I go to Credit Karma, does it say my score is X? Let's say it's a 680. But then when my loan officer, like Wes, Ed, Amanda, when they pull credit, they're actually told their scores are a 600 or a 580. Like, how is that even possible? Can you guys validate? Is that something that you get? Is it confusing when somebody tells you their score is one thing and then when you go to call?
Every day.
Yeah. So Wes, Ed, do you guys want to tell us why that is, or do you want me to answer it?
Oh, well, I mean, every single different institution and every single type of credit, whether it be student loans, car loans, credit cards, or home loans, they've all got different algorithms to really
Yeah.
calculate the amount of risk that's going into the lending side. So
Yep.
you're
So
going to get.
that's definitely part of it. So I'm going to hold explanation here for the next couple of slides, but definitely there's different models with even within the FICO product. So the main answer, and this, by the way, is a couple of slides that talk to a free guide that I'm going to follow up with you guys on, and it's called Credit Clarity. And the Credit Clarity Guide answers this exact question. And it says the 3 reasons why your credit scores differ is because of the bureau, the brand, and the day. So the bureau is, as you guys know, since in a mortgage situation, you're pulling all 3 bureaus, it's TransUnion, Equifax, and Experian. The day is obviously, it's kind of a living and breathing thing. I don't know if you guys saw that commercial years ago. I think it was Credit Karma, where it says something about don't tattoo your credit score on your body. Because literally your credit score, your credit report is getting updated daily, and your credit score uses the data on your credit report in order to calculate. Therefore, it's ever changing. But the middle one is where I want to spend the most time, and that's brand. So I want to use a ketchup analogy to explain this. So if you go to the grocery store and let's say you're buying ketchup for your child's barbecue because it's their birthday party, it's going to be sitting out in the sun all day, and ultimately you just decide to get the Vons ketchup that is on sale for $2.99, and most likely it's just going to get thrown away, right? But when you go and you want to buy the premium product for your house, maybe you decide to buy the Heinz organic ketchup that has, great ingredients, good quality organic tomatoes. Heinz is like FICO. Heinz is the top sold ketchup worldwide, by the way. FICO, 90% of loan decisions utilize the FICO branded credit score. So Heinz is the FICO. However, just like I said about the Vons branded ketchup, is there are alternative ketchups. They all still have tomato sauce, but some of them, or tomatoes, some of them also have corn syrup. Some of them have other fillers in it, right? Maybe food coloring, etc. But ultimately, it's still ketchup, right? So let's go back to FICO. FICO is the company, again, I work for. It's been around the longest. So their credit score products are the most trusted because they are the most predictive of risk. Okay. However, just on the slide says, there are other brands of credit score, Vantage Score, Credit Expert Score, and several others. But these are the ones I want to focus on for today. So when you go to Credit Karma, you're actually getting the Vantage credit score. Okay. Both credit scores, FICO Vantage, both credit scores. However, Vantage has corn syrup and different ingredients and different amounts of tomatoes and fillers. And therefore, their credit score is almost always higher than FICO credit score. So you may get a 680 in Vantage, but then when you go to FICO for your loan, you're getting a 580. It can literally be 100 points difference. Any questions on that so far before I keep going? Both credit scores, 2 different brands. Okay. Credit Expert I mentioned here because when you guys go to your loan team and they say, hey, we're going to do a rapid rescore, or my credit analyzer says to tell the client to pay down this credit card or go do X, Y, and Z. The credit analyzer tool that is available to loan officers utilizes a Credit Expert model. Credit Expert and FICO are still 2 different analytical solutions, which is why sometimes the analyzer is inaccurate because it's using a different weighting of model to determine what a potential score could be. Okay. So analyzers are helpful, and we'll talk about it again in a moment, but ultimately I just want to point out in the fine print where it has kind of the plus 10 or whatever next to the credit scores on the lending credit report, it's specifically utilizing Credit Expert Analytics. Okay, all right, so let's meet Robert. Robert's one of my past clients, and what we did with Robert is we pulled a couple of different credit scores all on the exact same day. And what we found is that there was a 77-point difference across the different brands of credit scores. Okay, so this is a real life situation. When you look at the high and you look at the low, you'll see. So TransUnion Auto. So I'm going to talk about the FICO. There's 4 categories for FICO, and this is what Eddie was saying earlier. Not only is FICO a great trusted brand, but over time, FICO has developed specific scoring models for different application types to be even more predictive. So if you're going for an auto loan, FICO is going, or the bank, let's say Bank of America, will actually buy the FICO Auto in order to get the most predictive score for that specific application. Okay, but if you go to a different division of Bank of America, such as the mortgage division, you're going to use a different FICO model, and that one is going to have a different credit score. And it's not actually called FICO mortgage. I'm just generalizing them for this. It could be FICO 5.0, 4.0, whatever. Okay. So I just wanted this table to just kind of show why credit scoring is so darn confusing, not only to your clients, maybe to you guys, but in general, it is just a lot of misinformation out there. And some people have no idea, you know, what any of this means. And so one of the things that I'm actually putting together is a new video for our clients. So when they come to us for help, they can actually watch this 10-minute video to learn all of these basics so that when we jump on a call together for their consultation, we can make it so much more meaningful because they already have the basics about credit under their belt. Because I don't like to spend most of the time answering and trying to retrain their brain because they were told one thing that's not accurate. I want to get directly into their recommendations. And I'm hoping that's going to help us get there. So anyways, let me know if you guys have any questions. I hope that was helpful. I'll get you guys the free credit clarity guide. It walks you through several different slides or pages that really go much deeper into each of these areas. So this is really important. I'm only going to take Vantage and FICO comparison side by side, but again, this kind of goes down to they have different ingredients to make up their models. But I want to explain in a pie chart view what I mean by that. So if you've had late marks on your credit, charge-offs, collections, or late marks, and your FICO models in general, that makes up 35% of your credit score. However, in the Vantage credit model, it only makes up 32% of your credit score. So what does that mean? It means if you have late marks or derogatory marks, your FICO score is going to be more heavily impacted than your Vantage credit score. Boom, right away, that tells me why Credit Karma is often higher than FICO. This one little area of the pie chart alone. Okay. So this to me is really important for you guys to understand. And it's one of the things that I try my hardest to convey to clients, that 65% of your credit score. So take off payment history for a minute, that's 35%, but the remaining part makes up 65%. 65% of your credit score makes up your good credit. So if I was a typical credit repair company, I actually wouldn't have the expertise, nor would I even look at the rest of the credit report. So the biggest failure in general credit repair companies is they don't know and they don't teach what a client can do to help raise their credit scores based on amount owed, which is revolving utilization rate, length of credit history, which is inquiries and most mature active accounts, mix of account types, and new young credit. All of those things are what they're missing out on. And therefore, a lot of times clients will be dissatisfied or they won't see the score improvements, even if they get deletions of negative information off the credit report. Any questions or feedback on that? Does that make sense to everybody? To me, it's one of the biggest issues with credit repair in general, and where we really try to differentiate ourselves because we do have the expertise to be able to teach alongside of, repairing. One more thing I'm going to say about this slide, and this is kind of was alluding to about COVID's really done some interesting things to us. In the past, credit repair was really defined as the credit bureau dispute process, right? Online disputes or paper disputes. We're challenging items that are negative on the credit report with the goal of getting it removed, right? Sometimes what we're finding is that's not the best path, especially when you guys send me a client that says, oh, by the way, we're in escrow and I need this done in 3 weeks, which isn't ideal. But credit repair minimum is 30 to 40 days. So I can't do credit repair when we've got such a tight time frame, right? So we got to get creative. But what we've actually found is a lot of the collection agencies have evolved their policies to allow for more pay for deletions. So let's say I have a $500 collection with portfolio management or Midland Collection Agency. Now we can go to them and we can get them to settle that and agree to remove that collection fully off the credit report. So yes, the client has to pay for that settlement. Sometimes, we can get it down to 35% of the balance owed, but they have to pay for the settlement. But in return, they quickly get that collection off the credit report. And a collection can be anywhere between 10 and 80 points of a credit score that the client will get back. And the reason I give that big of a range is because if it's the only derogatory mark, it could easily be 100 points of their credit score. But if they have a lot of derogatory marks, it could be as little as 5, 10 points of their credit score that they would get for that one collection. Okay. So again, the trend is, even though it's not always, that more and more collection agencies are agreeing to remove the collections through what we call the pay for deletion negotiation, which is a settlement, and in return, they'll remove that collection. Now, sometimes that still takes 30 to 60 days to show up on the credit report, but in the urgent situation, we'll try to get that in writing, and then the loan team can do a rapid rescore since they'll have proof saying that that collection has been removed from the credit reports. Okay.
I've also found in the past that if they do have that letter, there are phone numbers, and I think that you provided me with the phone number, each one of those credit bureaus, where you can actually get somebody on the phone and either fax it to them or email it to them, and they can do it right on the spot.
Yeah.
Get somebody on the phone like
Yeah.
that.
Yeah. Equifax has been horrible lately, but the bureau sometimes will take that information and update it sooner than waiting for the collection agency to notify them. And that saves you from having to do the rapid rescore. And, for us, we have about 300 loan officers nationally that refer us business. And so there are many of them that can't do rapid rescore. I mean, you guys are lucky to have Movement Mortgage have that ability. But there are many that don't. And so, it's nice when we can get it in writing and you guys can do that. Okay, so hopefully, I didn't want to spend a ton of time, but I just, whenever I get a chance, especially to talk with realtors, I just find it so helpful to be able to share a little bit about credit scoring, because I do think that it is such a big part of the overall loan decision and getting your clients into their dream home. So I really want you guys to be able to understand the basics about credit. There's a couple slides here, and then at the end, I put some questions and answers that I developed specifically for this team, but it's specifically around like, what do you say when your client tells you they can't buy a home because they have bad credit? So we probably won't get to those slides, but if you guys can take a look at the deck that I emailed you guys, look towards the back of it, and hopefully those Q&A questions will really help you guys be prepared to be able to help, when somebody says they have credit challenges, tell them that you have a partner, get them over to me, and let them know that credit challenges they're not going to hold them back if they're willing to actually to do the work to be able to raise those scores.
I think that's a big thing to hit home with too, is that credit isn't forever. It's just this period in time, this snapshot. a lot of people, there's a lot of emotions that surround these credit events. I've dealt with clients where they've had a death in the family, where they've had like a hospital situation, medical situation. And so it can be a very emotional conversation. It can be something that they are, shy to talk about, or
Yeah.
maybe, they're just feeling like ashamed about talking about it. And so it's something that you can gingerly navigate through and help connect them to Ed or us, and Nicole. And Nicole can help them get through to the other side. Just let them know that there's a game plan to get through to the other side, and we'll help them get that situated. It's just a matter of time. It's not, and once you have the game plan, it's not a matter of if, now it's just a matter of when.
Yeah. So many clients that come to me, they're like, gosh, thank you. I just needed to know a plan. I just needed a priority list. Like, I just didn't know where to start. And a lot of that we cover right in the 15-minute free consultation. So, whether they're serious about taking action today, or if they're not quite ready, but they just wanted to understand if it's a plan, if there really is a plan, it's just getting that knowledge, I think, is just really the key. So it's so true, Wes. One thing I did want to share is there's often questions around soft pull versus hard pull. So soft pull just means that you're pulling credit for educational purposes, where a hard pull means you're pulling credit because of an application. So a hard pull can hurt your credit score. It doesn't mean it always will. There's variables in that. But anything that you do, like if somebody comes to me without a credit report, we're recommending Identity IQ and MyScore IQ as our preferred vendor. They both charge $1. We get all 3 credit bureaus and scores. Identity IQ has a monthly rate of $19.99. This is with our discount code. MyScore IQ has $29.99 for their monthly rate. The reason is because Identity IQ comes with Vantage credit scores. MyScore IQ comes with FICO credit scores, FICO General to be specific. So when I have a client that is really serious about wanting to buy a home and it's in the very near future, I'm starting to recommend MyScore IQ more, because I think it really helps align to their specific goal and gives us measuring, scores that we can measure and track that are more like their FICO mortgage score, which is what you guys are going to be pulling for them. But Identity IQ uses Vantage. It's a lot less expensive. And so if we have somebody we're going to be working with for a while, maybe based on income or other variables, they're not going to be buying for 6 months, 12 months, then that's a great affordable option. You get a 7-day trial. You can cancel within the 7 days. I will send you guys my discount links. You're welcome to use them and share them. But just FYI, that's kind of the difference between soft and hard. Credit Karma is great. It's free, but it doesn't give you Experian. And to me, anytime we're talking about credit, I want to look at all 3 credit bureaus because they can differ greatly. And then lastly, the annual free credit reports are great, but they don't come with credit scores. So if you're saying I need a 680 credit score and I'm looking at a free report without scores, I'm kind of lost in helping set those goals to figure out how to help you get there. So for us, we either need a lending report or we need an Identity IQ or a MyScore IQ report when we're doing a free consultation with the client.
I have a question.
Sure.
So for somebody with credit issues, like how motivated do they need to be? Like, is it better if they know they have issues to talk to you directly, or do the first step and talk to somebody with movement first, a loan officer, get their credit score, and then be referred to you? Or, I mean, like what do you recommend?
I think if their goal is home buying in the next 6 to 12 months, I think it's great to start with the loan team. I think if it's just, hey, I went through a life event and I'm really struggling and I don't know where to start, I say just come to us directly. And then, once they get closer to, the recovery, and then they're starting to set goals for themselves, such as home buying, then I think, engaging with a loan officer is more appropriate. That's just my opinion. If anyone has something else that they want to share that's differing, I understand.
No, I concur. I think that's great, Nicole. I think it's great, the time frame. If it's a more immediate thing, then let's get them connected to us, because like Nicole touched on earlier in this conversation, it's very helpful where we can provide parameters to Nicole so that she can better help guide them on like their plan and what they need to do to get them there. Maybe they're looking at FHA financing where the minimum FICO is 580. You know, maybe they're looking at conventional financing where the minimum FICO is 620. So, you know, if you send them directly to Nicole, then we're not going to have that piece of the puzzle in the equation. But if they come to us, if we have a simple conversation and we understand that we're connecting them with Nicole, at least we can kind of get a feel for assets and other circumstances and get them qualified to get that info over to Nicole.
And then like for the duration of time, is that just going to vary depending on what their situation is to get it cleaned up?
Yeah, I mean, we have clients and services that are 30 days. We have clients and services that are six months. It's just every client is different. It really is. I wish it was more black and white. But we really try to assess it during the consultation, and then we provide them a proposal for just the services that they need. And then I would say about 30% of the time, we're just providing free advice because they don't need our services, or it's a task that they can go off and easily do on their own.
Okay.
Yeah. And one other thing I haven't touched on yet is student loans. I mean, a couple things about student loans. We've been providing services related to modifying student loans, rehabbing student loans that are in default, calculating new monthly payments. Like if the guys pull credit and they say, hey, this client wants to qualify for a larger home loan. However, they have so much student loan debt that their debt to income rate, it's really negatively hurting the debt to income ratio. Things like that we can help with. Regardless on what type of adjustments, it's specific to federal student loans. And then there are some changes that recently came out on forgiveness, where we've got a group of experts on our team that's all they do is help clients with getting loans forgiven. So pretty much anything related to student loans, when they're done with school, if they've got 5 loans, 20 loans, the goal is to consolidate them, put them into one loan, because think of the credit score, it measures risk. Well, when you have an excessive number of anything, it impacts your credit score. So sometimes it's just a matter of consolidating the student loans. And when you do that, it actually brings down the monthly payment. It restarts your forbearance time for 36 more months. So all of that is something that we include in our free consultation. If you see or hear about somebody who has a lot of student loan debt, whether it's for themselves or their children, their young adult children, all of that is something that we can assist with as well.
And I have to agree with you wholeheartedly on the fact of, if you're looking to buy a house, we should probably be your first pitch stop. If it's something that if it's your clients, let us take a snapshot of where they're at. And if it's family, friends, yourself personally, one of those big life events happen, medical issues, what have you, you can go directly to Nicole. But if they're looking for a house, you definitely want to start with us, because we can give guidance to Nicole and be like, hey, this is what we're trying to do. This is where we're at. And we may not even need to go there. We may not, they may, like Wes said, they may be on the precipice of, qualifying for a loan, and we can figure it out on our own how to get them into that home without even needing to get Nicole involved. So yeah, it depends. Every situation is very unique. So feel free to reach out to any one of us, Wes, myself, Amanda, whoever, Anthony, Matt, Trinity. Just hit one of us up and ask us, and we'll point you in the right direction. We'll let you know.
Is this cleaning up your credit? Can it be expensive for people?
Yeah, so our pricing starts at $200, but again, that's why we've also brought in a lot of do-it-yourself guides to be even more affordable. I think for clients that are really going to be on a budget, I think that's going to be a great solution for them. But they go up anywhere between the $27 guide or even the free guides, all the way up to a little over $700.
It's like a permanent fix for.
Definitely, we guarantee all of our results.
Oh, good.
Yep. Yeah. So,
she has a reputation a mile long with me and with movement. She's the best. She's the greatest. I just can't say enough good things about Nicole. She has integrity. She is intelligent. she knows her stuff, like really complicated credit situations, I can send them to her and Nicole will help unwind this tangled web that's been woven. She's amazing. So I'm just really happy to have her as a partner alongside us and alongside you, so we can help you convert more potential home buyers into home buyers and just help people in general.
Oh, you're giving me chills, Wes. You're so
He said.
thank you.
It's all true though. I trust their guidance, definitely.
Yeah.
So.
It's hard stuff. I mean, I'm so grateful that it's so funny. I mean, I wish we had all another hour, right? I'm so grateful for my friend who gave me a job at 16 years old as a night collector, and all the years of just, you know, working my way up to the ladder and understanding all this stuff. And I'm so passionate about teaching and making sure, you know, because this industry is fraught with, you know, just a lot of fraud. Like, I try my hardest just to be, you know, true and ethical and honest, and only take clients and charge them when I know I can help them. I guess because I just have always feared being grouped in with them. And so I am grateful, and I'm so blessed to have the movement partnership nationally in many offices, not all. I wish to expand that even more. But this is hard stuff. And I don't want you guys to feel like I expect you to walk away and be able to just talk about credit. But I want you guys to know, one, that I am a trusted partner, that I'm here to support you to be more successful, for you to be more successful, right? This is a hard business we're all in. It's competitive. So, you know, I hope you have a Rolodex of people that you trust, and I hope you feel comfortable adding me to it. And then I would just say that ultimately your client has to want it, right? I mean,
They have to be motivated.
Yeah, but I will tell you, sometimes they're not. Sometimes they come to me and they're like, oh, well, I heard you're going to give me a free consultation. And after a real meaningful conversation, they're like, wow, I didn't even know this stuff. I had no idea you were going to teach me these things. And all of a sudden because it becomes something more tangible and believable that I can do this and I can recover from this life event that's really been holding me back. And then they can set these intentions for their future and what that's going to look like. And it's going to include a home loan, a new car, whatever it is they want to do. And all of a sudden now they're committed. So even if it doesn't feel like a strong commitment, I would say, look, I would ask my client, like, what's the harm in meeting with somebody that I trust to just look over your credit report for free? Like, I don't know who would say no to that, as long as you bought in. If you haven't bought in, then they're not going to buy in. But if you're committed and you believe in what we can offer you, then they're going to follow your lead. Yeah. So the other thing is, come to me for your own credit. I mean, unless you have an 850, don't bother. But if you don't have a perfect score, that's the beauty about one of the things we're working on is a new membership, which is going to be ongoing, very, very affordable, that you're going to continue to get education and ongoing reviews of your credit report. Because what I continuously hear from clients that come back year over year is, I still want your help. I'm getting ready to make a major purchase. Can you look at my report one more time before I, have my loan officer pull credit? And unless you're at an 850, I can always help you. I don't care if you need 5 points, if you need 200 points. I mean, ultimately, perfection's really hard to achieve, and it does take age. Most of us look like we're way too young to have a perfect score. And so regardless on, where you're at, there's always room for improvement.
And I have something to add to that, because a lot, especially when I'm talking with millennial clients, I'll hear like the competitive nature between like a husband and wife. Yeah. Like, I have the 800. Well, I have the 805. And it's like, you know what, guys, at the end of the day, in the land of mortgage, anything over a 740 with respect to interest rate is typically gravy. And then anything over a 760 in the land of mortgage insurance is gravy. So, that a lot of people have these misconceptions of like, I need this 800, this magic 800 to make it work. There's just so much misinformation out there because everyone goes to the Dr. Google, to go get the information rather than go talk to somebody like Nicole. And so that's what we're really trying to do here, is just connect Nicole with as much people as we can. We can help them out and get them their plans and get them on the path to you helping them get a place.
Yeah. I like it when they're going for 800s. I like when they said big goals. And one thing that you'll see, and I'm sure Wes and you guys have seen this, is sometimes we'll break it up into phases. It's like, okay, I want to buy a house in 3 months, but then in a year I want to refinance it, or I want to take out a HELOC, or I want to put a pool in. And so we really try to create the phased approach to align with their specific goals, which I think is great too, because getting them in the loan as quickly as possible, since we don't know what's going to happen with rates, and there's all these variables, right? We don't want to delay something and say, oh, let's go for that 740 and let's wait a year. If we can get them to a 680 and get them in a good program now, let's do it. And then let's continue to work through the increases over time through additional services, and that always works out really good too. Have you guys seen that when some of the clients we work on together?
Absolutely. Definitely.
Yeah.
Time and time again.
And
Perfect.
I like that you're educating clients and you're empowering them to really take control of their lives. Because I think some of the people that I'm talking to are kind of intimidated to talk to my loan agent, and just knowing that you exist and that you're such a positive force for change, for good, I think is going to really help people, and just kind of get out of that intimidation factor. So they know that, now they have the tools, to make that change.
Yeah, no, thank you. I that's why I really, really am so focused on bringing in these new courses, because as you can imagine, I can only help one client every 15 minutes, right? Even though I have a great team of people that do a lot of aspects of our business, I have chosen to continue to do the consultation portion myself, which is the death of me at times. However, I'm really trying to build as much of the education into online courses to allow them just to come in and consume it at their convenience, so that they can learn as much as they want to learn, or as little as they want. Some clients are like, I'm super busy, I don't have time and energy for this, just do it for me. And that's great, I can do that. But the clients that really do want to learn, because they didn't learn in school, they didn't learn at home, I'm going to be able to provide that as we continue to expand our online courses. And I just truly believe that what you'll see in a lot of our marketing now is it's educate, evaluate, and empower. And that's really now what our phased approach is going to be, because I feel like if you don't have the basic knowledge, then how is it that you're going to be able to understand your own credit, and then even, work together as a team with done with you services in order to accomplish those specific goals? Or even maintain the good credit once we get you there, right? I don't know how many times I have clients come back a year or two later, and then all of a sudden we're doing this all over again because they really didn't understand how to maintain the new scores that they had. So anyways, I hope this was helpful. If you didn't get this deck from me, please let me know. I did try to send it out right beforehand. I'm going to give you guys the links to our discount codes for Identity IQ and MyScore IQ. I'll make sure you have my contact details, even though it is in my signature there. And I will also send you the how to refer email. There is just a basic email template. Just like if I'm referring something to you guys, obviously starting with that email handoff is really, really helpful for the clients to introduce our name. And that way, when my assistant Alexis, for example, calls them and says, hey, I'm here to help you pull your credit report, they actually know who we are, and they don't think we're a collection agency, which is when we say B squared credit, usually what they think. So, but I'll follow up with a few of those things after this call. Is there anything else that that I can send to you guys, or any other questions that you guys have, since we do have a little bit more time?
Did you want to touch on some of the frequently asked questions?
Sure. Yeah, I'll jump through them. So this one is, and some of this we've already kind of talked about, right? So ultimately, they went through a life event, and this is the one thing I will say about people with credit challenges. Most of my clients aren't deadbeats. Most of my clients truly had like a major life event. Now, if they had all put 20% of their income away in savings for rainy days, they probably would have been able to salvage their credit. But unfortunately, a lot of us aren't saving sufficiently, and therefore, when something goes wrong, they end up defaulting or missing payments on accounts. So ultimately, we're all going to have life events. it depends on how much we have in our savings account and how much available credit limit we have as to how we're going to be able to kind of ride that particular wave. But for a lot of my clients, they did have major credit impacts, and ultimately they now are financially stable, because that is kind of a requirement, right? I mean, we have this issue. Well, today we have to have income, right? We have to have the ability now to kind of move forward. Assuming the income is back on track, now we can focus on how do we raise those credit scores, recover in the quickest amount of time. Sure, they can wait 7 years and everything's going to fall off, right? There's things that they can do. But if they really want to buy a house in a year or 2 or 6 months, then obviously engaging an expert like me is the key, not just sitting back and waiting for something to happen that's not going to happen naturally. So that's definitely refer him to me. I don't care if it's 5 points. I don't care if it's 200 points. I don't care if they're, I rarely see anything under a 450, but you know, sometimes I see those 400s. I don't care where we're starting. I can definitely help.
You got to try hard to get down there.
You know what, I say that actually. It is a lot of work to get to 400s for sure. So if you guys do marketing, some of you guys are really good at marketing and social media posts and things like that. Again, the Credit Clarity Guide, it's a free guide. Feel free to share it. Feel free to share, you know, pull your credit reports for $1. Whatever you guys want to use of my tools that I share with you, I'm totally fine with you guys sharing and appreciate it as well. Fraud. So I mentioned I do have a strong background in both transactional and identity fraud. I was actually vice president of fraud at Bank of America when I left there before moving to San Diego to work for FICO. So fraud is a big problem. It's ever growing. And so if you have somebody that's been a victim, I wish I could provide fraud services for free. Unfortunately, it just doesn't work that way. They're inexpensive, but ultimately there's a process flow that you have to go through, such as a police report, filling out a fraud affidavit, notifying the credit bureaus. Sometimes it's a federal escalation. So all of these different issues that victims of fraud could be feeling and how it could be impacting the credit report is something that I'm happy to help with. So regardless on the cause, whether it be a life event or a victim of fraud, that's something I can definitely help. We talked a little bit about student loan, DTI issues, just overall loan debt issues. I am sending out a few more emails here shortly to our student loan database because the government just announced some changes to forgiveness that expires October of 2022. And so there are a lot of people that didn't know they qualify that may qualify now. And so we will try to help where we can there on the forgiveness overall. There's a lot of companies that have gotten in big trouble with trying to provide forgiveness services. So at this point, I do not provide paid forgiveness services. I'm just providing them as a consulting fee, just one time, you know, based on the level of effort. And usually it's somewhere between $50 to $200 in order to put them on their way to go and actually complete the work on their own. And then we audit the applications, audit the process, make sure everything's been filled out right before they submit it. So that's an area we can help. And that's really it. As you can see, I just dyed my hair brown. All right.
Thank you so much for taking time out of your afternoon, everybody that's on this call. I think we got some really great, helpful info. Thank you again, Nicole, for taking time out of your day to join us and share the info with us.
Definitely. Thank you,
Yeah,
guys.
really appreciate your time, Nicole. I know everyone's time is very, very precious, and you were just so helpful to everybody that I've ever sent you, and just straight shooter. If you can help, great. Here's how I'm going to help. If you can't, then you can't. It is what it is, but you know, the honesty and the directness is very much appreciated, and I'm really glad that a lot of new faces and older ones that have been with us for a long time got a chance to join us and to meet you and to listen to everything that you got to say, because it's so important, and it's an ever-changing industry just like ours. Real estate, mortgage, credit, I mean it's just constantly evolving, and the value that you bring to all of us to give back to our clients is just it's invaluable. So thank you very much.
Thank you, guys. Keep well. And one more thing I was just thinking about is debt consolidation, debt settlement, bankruptcy. I mean, there's times that we refer out to those because that's what they need. Think of us as somebody who helps with credit challenges. If somebody has a financial problem, it has to be addressed before we can fix a credit problem, okay? A couple other just quick things that, sorry, just came to mind. One is if you have an auto repo or an apartment collection, you're likely to get sued. If you get sued, you can't get a home loan, right? Because you'd have a civil judgment. So whenever I see those types of issues, we really do talk about the importance of stabilizing those accounts to avoid getting sued or to resolve a judgment. All of that stuff I help with. But you know, just there's so much with credit. But if you already find a client in debt consolidation or with a debt settlement company, send them to me. Let's look at it, because a lot of times it's not in their best interest. And we need to get them out of those programs and get them into, you know, sometimes it's not even credit repair. Sometimes it's just getting them to deal with the situation differently so that we can do credit repair later. But, you know, you don't always get to walk away from issues. And unfortunately, sometimes clients have to deal with some of these issues through settlement because, you know, when you have a judgment, something that could have been settled for $1,000 becomes $10,000. And then at the last hour, you guys are in the middle of escrow and they've got to pay it off because you didn't realize that they had a judgment pending, or, you know, some lien or something, which you guys pull that data pretty early. You'd be surprised how many loan teams I work with that have no idea until title gets involved and pulls supplemental reports that there's even an unpaid judgment that has to be satisfied before they close. So
we can close loans with judgments. They just need to be satisfied in season. So
yeah,
that's still not a showstopper. You know, it's
right,
just
right. But your point was they have to be satisfied, right?
yes, definitely. There's a roadmap. There's a game
Yeah,
plan.
that's what I do.
It's all about getting the roadmap and the game plan.
Yeah, totally. All right, sorry, just some last minute things I think I'll add to the next slide. I'm meeting with your Carlsbad office tomorrow, so I think I'll throw a few more slides in before I do that session. So if you have any other feedback, please let me know. Again, I appreciate you all so much. Thank you.
Thank you, Nicole.
Namaste, Wes.
Have a great holiday season, everybody.